All right, everybody. So welcome, welcome, welcome. I am so glad that you guys are all getting started trading. It's truly become one of my favorite activities. Sorry. And we'll just wait till Kevin finishes rustling paper bags in the back. Are you? Okay, great. Let me start again. So yes, welcome everybody. Trading has become one of my favorite activities. So I'm super excited that you guys are going to get started trading, that you guys are trying to figure out, how to multiply your income, multiply your revenue, increase your savings account, whatever your goal is, investing, whether it's in the foreign exchange market, whether it's cryptocurrency and Bitcoin, the stock market, whatever it is, investing is just a good thing to have in your wealth building portfolio. Whether you're an entrepreneur, whether you want to be a full-time investor, an employee, whatever your financial situation. So today we're going to go over a couple of different things that are going to help you figure out, one, how to trade, how to put in trades, and then also how to work the tools that iMarkets Live offers you guys to actually make money and how that actually works. All right, perfect. So here's the agenda. We're going to quickly go over setting your account. I'm not going to go through that too in depth just because that's already covered in the academy. We're going to talk about the apps that you need to download, the tools that will help you analyze trends and get trade signals, the different kinds of traders, different trading strategies, and then how to actually set goals. Okay, so I'm going to make sure that this is about 30 minutes long. So I might go through a couple of things fast, but there are a ton of support videos in the library. So you can always go more in depth into certain things that don't make as much sense. So the first thing is setting up your account. Easy breezy. As you got the instructions via email from me, once you signed up, you're going to set up your live account. You're going to choose your broker. Most of us go with Trader's Way just because it allows you to, one, deposit the smallest amount. So I believe you can start an account with as little as $10, $20. And you also can deposit with a debit or credit card. While it is not recommended for you to fund your account with a credit card, it is an option. You just have to make sure that you let your bank know, because the same way that you want to trade these foreign currencies, there are also going to be foreign transactions up in your account. And what you don't want to happen is your bank shutting you down, sending you a new debit card, or locking your account because of the weird transactions. So I always encourage everybody to just call their bank and let their bank know that they're going to be making transactions with an international broker, so that way it can be as smooth as possible. Once you create your account, you have to verify that you're a real person, right? Because we don't want people out here scamming, stealing credit cards, stealing debit cards, and creating accounts and trading foreign exchange, right? So they just have to make sure you upload your license, your passport, some sort of identification to make sure that you are you. The same way that you're going to be able to access funds and deposit funds, they just want to make sure that the person who's getting those funds is indeed the person that they say they are. And then, of course, after that happens, which is usually anywhere between 24 to 48 hours, you can actually then put money in your account. After you create your live account, you're going to create your demo account. And what you're going to be doing for the next week or so is within your demo account. Do not Facebook message me. Do not text me. Do not email me talking about you lost $500 because you decided that you wanted to trade in your live account like my boyfriend Kevin does because he thinks he knows what he's doing and he don't. And then you lose a whole bunch of money, right? So your demo account is very, very important. And I know that a lot of us get hype and we're like, oh, we made $5 today. Okay, boom, I'm ready for my live account. And then it goes left. So I definitely encourage you guys to trade on your demo account at least for a week so that you can figure out what's your trading strategy, so you can figure out what your favorite pairs to trade are, your favorite stop loss, if you want to put a long stop loss or a short stop loss. We'll talk about all that kind of risk management stuff throughout the call, but it's very important for you to start putting in trades on that fake account so that you can get a feel for the type of trader that you're going to be. You can fund your demo account with $5,000, $1,000, $500. It's fake money, so you can put as much money in there. I always recommend that you put in the amount that you're planning on trading with, right? So when I did my demo account, I traded with $1,000 because that's the amount of money that I want to trade with on my account. Then, of course, you want to save your login information because you're going to use that to put it into your MetaTrader app. All right. So then the next step is to download your apps. Obviously, you've probably most have done this. You download MetaTrader 4, which is where you actually execute your trades. Think of it like Venmo or Cash App or something like that. But instead of you sending money to your friends, the Forex market is sending you money when you win trades, right? So the MetaTrader app is where all of the trading is going to go down. Anytime you want to put in a trade, anytime you want to get into the market, it's going to happen in the MetaTrader 4 app. Okay, there are some desktop options. I haven't figured out how to download it on my Mac. It's too much work. It's easier on a Windows computer, so you can definitely also trade from your desktop if you want to install it. But the MetaTrader app is easy on the go on your mobile phone. Swipe Trades is the app that we use to get what's called trade signals. And there they give us basically, it's trading 101, right? Like it gives us exactly what we need to put into our MetaTrader 4, what trades to take, and then we can set it and forget it. And then of course, Zoom, which is what we're on right now for all our meetings and trainings and stuff like that. So let's get into the basics. A signal. So you're going to hear this a lot. A trade signal is basically the currency pair that you're going to trade and the alert on what to trade, right? So you'll hear whether it's on calls or whether it's in the app or in the software, you'll get a signal that'll say buy Euro USD, right? Which is EUR-USD. So the euro against the US dollar. You'll get something that says sell Euro USD or buy gold and Euro USD or sell, the New Zealand dollar against the Japanese yen. There are a trillion, million, bajillion currency pairs, but a signal is basically an alert telling you what pair to trade, right? Every single pair moves differently in the market. Every single pair has its own personality or characteristics, for lack of a better term. So all of the trade signals are going to be different. You might be told to buy Euro USD and sell USD JPY and sell limit this and buy limit that. And it's going to get really confusing. But the most basic of the basic is that you need to make sure that you're trading the right currency pair, right? Euro USD is very different from Euro CAD, right? A lot of the pairs might look similar. They might have similar acronyms, similar abbreviations. So it's very important for you to pay attention to the signal of the actual trade. Now, this can get a little bit confusing because a lot of times people who invest in stocks, they're told buy when it's low and then get rid of it and sell it off when it's high. In the Forex market, you can trade both positions, right? You can buy a currency pair or you can sell a currency pair. When you buy a currency pair, you buy the currency pair when the price point is low because you're expecting it to go up in the market so you can sell it at a higher value. When you're selling a currency pair is when the currency pair price is high and you're anticipating that it's going to drop and you can sell it when it's lower. Sometimes it's called a long position, which means a buying position, or a short position, which is a selling position, right? So there are some times when you're going to buy a currency pair or sell a currency pair, depending on what the signals are and what they anticipate is going to happen in the market. Take profit. This is the most important part of trading, okay? Your take profit is literally where you take your profit out, right? It is the price point that you set where you decide that you want to get pulled out of a trade. So in MetaTrader 4, which is abbreviated to MT4, a trade that you already have in, or a position that you already have put in, will get automatically closed out once you have hit that point. So this is the point where when you're working, when you're sleeping, when you're out to dinner, when you're going on dates, when you're texting, when you're on Facebook Live, whatever it is that you're doing in your life, you don't miss an opportunity to make money in the market, because you will automatically set your take profit point, and you will automatically be pulled out of a trade in profit after you set it. Okay, so the take profit is really important, because this is where essentially you make your money, right? If you don't set a take profit and you forget about a trade and it goes in the opposite direction, you're going to lose out on money. So it's always important to put a take profit point when you're trading, so that you can basically secure your funds. Another important thing to put is what's called a stop loss. So a stop loss is basically the point where you're saying, okay, this trade is not going in the direction that I want it to go. This is as much money as I'm willing to risk, right? So you can say you want your stop loss to be $2, or you want to risk $3, right? It's telling the MetaTrader 4 app, if the price drops to this point or goes up to this point in the opposite direction of where I want it to go, take me out of the trade so I don't lose any money, right? Or so I don't lose more money. I'm sorry. So I don't lose more money. So for me, usually my stop loss, I might risk, depending on what my account is, I might risk $5, I might risk $10, I might risk $15. It really depends. But it's basically the point where you're comfortable with in risking that amount of money to make more money. So you might risk $3 to make $30, or you might risk $15 to make $80 in a trade, right? And we'll talk more about how that works later on. But what you need to get out of this is your take profit and your stop loss must always be put in with a trade to do what's called risk management, to avoid you losing out on a ton of money, and to secure that if your trade does go as planned, you're able to take those profits even if you're not next to your phone. That's what makes trading so automated and so hands-free, is that you're able to put in your stop loss and your take profit. All right, now lot size. Lot size is basically how we measure in the market, right? So it's the amount of money that you're putting on the line in the market, and it is what determines how much profit you make in a trade, right? So when you trade at a 0.01 lot size, it basically means that you're making 10 cents per pip. And a pip is basically a point that you're getting in a trade, right? When the trade goes up a certain amount of percentage points or down a certain amount of price points, that's what's going to be determining the amount of money that you're making. All right. So if you have an account of $100, you need to trade on 0.01. Why? Because if you start trading at 0.10, which is $1 per pip, and it goes left, you can easily have a zero account balance in 5 minutes, based on the amount of trades that you got going on. So it's very important for you to manage your risk accordingly. So we always say you can put 0.01 per $100. So if you have $200, you can put 0.02. If you have $300, you can put 0.03. The higher that you go up, the more profit that you stand to make, but also the more risk that you're putting into the market. So even for me, somebody who has $1,000 account, I still will trade on 0.03, right? I might enter some trades at 0.10 and risk $1 if I'm super, super sure. But most times I'm very, very conservative with my lot sizes, even though I'm an aggressive trader, because I don't want to risk too much money, but I want to gain a lot of money. Okay. So if you're starting off with a smaller account with a $100, $200, $300 account, then it's important for you to manage your risk accordingly and not trade super huge lot sizes. I recommend that you guys take a picture, a screenshot of this screen right here to help you understand lot sizes. So micro lot sizes go from 0.1 to 0.9. Mini go from 10 to 90, and standard go from 1 to 9. And the numbers that you see here, the dollar amounts, are how much money you're making and risking per pip. So if a trade is set to make 30 pips, right, and you are trading on 0.10, a mini lot, then you stand to make $30. If you trade at a 1.00 standard lot, then you're set to make $300, right? But again, it's very, very important for you to not put your lot sizes higher than what your account is going to be. So really, quite frankly, we should be looking at micro lots and the top three mini lots. So 0.10, 0.20, 0.30, and 0.30 is honestly very, very risky for new traders. So I always recommend just sticking to the micro lot. And we'll see all of this in action in just a minute. The next thing is a candlestick. So when you start to trade, you'll see a whole bunch of charts and a whole bunch of red and green, or red and blue. And basically what it's telling you is, what is the market doing? What are the price points in the market doing, so that you can analyze a trend? Because Forex trading is all about seeing the direction that the market is going and being able to predict what the trend is going to be based on past trends, right? So the market is always constantly repeating itself. The market is very, very predictable. So the candlesticks allow us to be able to see what direction the market is going to be going in. So if you hear something that's called bullish, like the bull's horns, it's going up. It's going up in an uptrend, which means that the price is increasing over time. Where the body of the candle is, so the green, that means that the beginning of that rectangle is where the price opens, and the end of that rectangle is where the price closed at that specific time frame. So it might be an hour candlestick, it might be a 4-hour candlestick, it could be a day long, a week long. Every candlestick has different time frames that you might see them in. But what you need to understand is that the beginning, the very, very bottom of the rectangle is where it opens, and the very top of it is where it closed for a bullish candlestick. The wicks of the candle, so the little black lines that stick out of the rectangle, are the highs and the lows. So that means this is how high the price got at that specific time frame and how low the price went at that specific time frame. Okay, so again, this kind of tells you how the market has been moving in the hour, in the 15-minute, in the 5-minute, etc. The bearish candle is opposite of the bullish. A bearish candle is a downtrend candle, and that means that the price is going down. So in the red rectangle, the very top of that red rectangle is where the price opened, and the very bottom of that red rectangle is where the price closed, again, for that specific time frame. So a candlestick in the 1-hour time frame is going to look very different from the candlestick in the 4-hour time frame or in the 1-day time frame. So you can look at your charts in different time frames to see what the market does at different points, okay? And then the same thing, the wicks, the green lines that you see sticking out of the rectangle, show how low the price went and how high the price went. Okay, so when you see all of these things, it kind of helps you to know what is the market doing, and the candlestick is going to tell you the direction that the market wants to go in. Okay, so like I was mentioning, time frames. When you look at the market, you can look at it in all of these time frames. You can look at it in the 1 minute, in the 5 minute, in the 15 minute, in the 30 minute, the 1 hour, the 4 hour, the daily, the weekly, and the monthly, okay? So when you're looking at your charts, these are all of the options that you have to look at the trends and analyze the market. All right, entering trades. And if you're like, oh my gosh, this is so much, don't worry about it, because I was absolutely clueless about this months ago. You'll become a pro at it pretty quickly, but it's important for you to just get the regular vocabulary down, just so that you can follow along with the apps and the softwares that are telling you what to trade. But you do not need to know how to analyze the market to make money trading, because we do that all for you. So in your MetaTrader app, you're going to be able to, again, execute trades. In the IML Academy, there are, y'all see up here where it says Basics 1, 2, 3, 4. So in Basics 4, there are the videos for trading on your iPhone and trading on your Android. There are 10-minute videos that tell you exactly how to use the MetaTrader 4, how to put in the trades, how to take partial profit, how to, move your stop loss, all that good stuff, right? All that technical stuff that I'm not going to go over today because y'all grown adults and you can log into IML Academy and watch the video. But what I want you to make note of is that in this back office is everything. It's literally the crash course on Forex, okay? So if you went to college and you took a class on Forex for a whole semester long, this is what it would be, right? Think of this like your syllabus. So the basics, you have technical analysis, you have intermediate and advanced, mindset, harmonics, all of these things. The basics video, you can go through all the videos in about 2 hours or so. Again, if you want to make money in the market, you need to learn how to trade, right? I'm getting to a point where, yes, IML has been amazing with all the tools and they've given me the fish, but now I need to learn how to fish, right? Because when IML only sends me 2 swipe trades a day and I want to make more money, I don't want to have to rely on getting the signals from somebody else. I want to be able to call my own signals, right? So while you're getting in and you're going to be able to earn money while you're learning the skill of trading, you still need to learn the skill of trading, right? Because let's say that tomorrow IML decides to shut down, it blows up, whatever happens, then you're going to be asked out if you're only relying on the signals, okay? So it's very important for you to log up in this back end, take some time. I listen to the videos when I'm cleaning, when I'm making the bed in the morning, like they're really, really short videos. So it's important for you to log on and know how to first, most importantly, work the MetaTrader, right? And then, of course, start to learn all of the basics and take a more of a deep dive into everything Forex related. Tonight is more so an overview so that you can get jump started and start trading ASAP. But you're going to want to take time over the next coming weeks to really dive into all of these different trainings in the back end. CJ said thug life. Y'all grown, y'all adults. I'm not going to sit here like, so first you go, we ain't got time. All right, boom. So you have your MetaTrader app. You basically know what the candlesticks are, all that stuff. So here, like I said, in the middle, you'll see the red candlesticks, which signify when the market was moving down, and the blue candlesticks, which signify when the market was moving up. In your swipe trades on your phone, you're going to log into your IML situation, into your IML swipe trades app, right? You're going to put in your username and your password. When you get a swipe trade notification, it's going to come in just like a text. It's going to look like this. I don't know what they got going on, this little fake beach background, but the fake beach is going to come up. And then on there, you're going to see a screenshot of the trade signal, right? And you're going to click the little accept button. And once I don't even know why they have this decline button right here because nobody's going to press decline. But nonetheless, you will press accept, and this screen over here all the way to the right is what's going to show up. And as you can see, it's going to give you trade information. So it gives you a screenshot of the chart. Basically, this is how we came to the conclusion that this is going to happen in the market. If you're more of an analytical trader and you need some explanation for why certain decisions are made. And then in the actual trade signal, you're going to see everything that you need to put in. So you're going to see the symbol, so USD/JPY, which is the US dollar against the Japanese yen. You're going to see the time frame, which is H4, which stands for 4 hour. You're going to see the trade type, which is buy. And make note that it says buy, and make note that down here in the order type, it says limit. Okay, so it's a buy limit. You're going to make note of the entry price, which is 113.939. They have 2 entry prices, so you can put in 2 different positions. So you can put in another trade for 113.781, or you can choose one or the other. Usually I choose the one that's closest to the stop loss so that I take on the least amount of risk. But there's some people who are like YOLO and they do both, or they take, the one that's farther away from the stop loss. It's really up to you. And that's why having the demo account is so, so important, because as you put in these trades in your demo account, you can start to get a feel for what are your personal preferences. Emily De La Cruz can tell you how she trades, but at the end of the day, you have to get into the swing of trading for yourself. Okay. So like I said, you're going to log into the app. You'll get these swipe trade notifications. This is what it's going to look like. And literally you're going to copy and paste. This is exactly what it looks like. It was just cut off in the other screen. So literally, like I said, it tells you everything. What you should put in, what kind of trade it is, the time frame, the entry price. You'll see down here the stop loss and then the take profit. Literally, you're going to copy and paste this into your MetaTrader 4 app. So in your MetaTrader 4 app, you'll see up here, you select the symbol. Then you decide what kind of order it is. So where it says sell limit here on the left side screenshot, you would click that and it will give you a drop down. And there you would select buy limit, which was for the trade that we just saw. So let's go back. We see USD JPY and we see buy in the trade type. And then we see limit in the order type. So it's a buy limit, right? So then we go back here. This on the left side, it's in iPhone. And then on the right side, it's in Android. I don't know why on the left side the trade is wrong, but we're just going to go over here to the Android side, which is correct. So you see the USD JPY. You see that they clicked on there. So if I was to click sell limit over here on the iPhone, it would give me a drop down. And you would select buy limit, which is the kind of trade that we were told to trade. Here is the lot size, right? So here it's 0.01, which means for every pip that this trade gets, they're going to get 10 cents per pip, right? If you hit the plus sign, it'll increase it. Again, y'all don't need to be hitting the plus sign ever in life until y'all get some more money in your account or until you have some common sense and know how to get in and out of trades without losing money. But again, do not get your lot size lit. You're trading 0.1, 0.3, 1 point, and then come up in my inbox talking about iMarkets Live is a scam and you lost all your money. You a scam and you lost all your money, okay? Okay, so as long as we clear, this is a recording. It'll be on YouTube. Y'all got me on the record that I told y'all to leave your lot size at 0.01. Okay, after you select your lot size, the numbers that you see here in red are basically what the market is doing at that particular point in time. So you could just ignore that. You would then put in the price, right? So you would put in the price, which was this entry price, 113.939. So you would type that in there. Same thing on the iPhone where it says price, you type in the price. You go back, you see the stop loss, 113.560. You type it into the stop loss, right? 113. Let me make sure. 560, and then you decide which take profit you want. So they give you 3. The different take profits are more pips, right? So the first take profit might be 30 pips, the second take profit might be 60 pips, and the third take profit might be 100 pips, right? So it's basically giving you price points that they are predicting the market will move towards. It's not guaranteed, but they're predicting that the market can move up to 100 pips. So if you want to wait out that trade for it to hit those 100 pips and get your $10, you certainly can. If you're like me and you're a little bit more impatient and you're like, you know what, I just want this trade to be over as much as possible and to have the least amount of risk as possible, then you would do take profit 1 or 2, okay? Each trade might come with only 1 take profit. It might come with 2, it might come with 3, but every single trade is going to come with, every single trade signal, is going to come with the entry price, the stop loss, and at least 1 take profit. So again, when you're trading in your app, all of these fields will be filled in, right? So you can set it and forget it. You don't need to look at your phone. You don't need to go in there and try to analyze the market. You don't need to go in there and have a heart attack. We got you, okay? Everything that you need to know to execute a trade will be given to you on the app. So you will be able to plug this in, hit place or hit place down on the Android and literally live your best life, okay? So again, this is for the iPhone and the Android. You would find the symbol where it says quotes. If it's not there, the little plus sign on the top right-hand corner, you would press it and you would find the symbol. Right, you would click into it. Once you click into it, this screen would pop up and then you would change, you know, the order type. So it might be buy limit, it might be sell limit, it might be buy stop, it might be sell stop, it might be market, whatever the app tells you, you put it in there. Okay. This is not for you to have to guess or wonder. Like, we're literally going to give you everything. Okay. So you'll find it, you'll click it in, you'll put in the trade. Okay. So like I said, here's the drop down. So once you click market execution, this drop down will happen and you select which one you want. You put in your trades and then you're done. You also want to read the notes because sometimes they'll send you up here, you see order type, it says trade update. So sometimes they'll tell you how to move. As the market moves, Swipe Trades is going to update you. So it might tell you close this trade. It might tell you take profit. It might tell you take partial profit. It might tell you move your stop loss. All of these things, which again, we're not going to go over today, but you can find it in that how to trade from your iPhone or how to trade from your Android video in the back office. But it's going to update you in real time. So that way you're not missing out on whatever is going on with the trade, right? So again, whether you're working at the gym, whatever you're doing, Swipe Trades is going to make sure that they have your back and that they're updating you every step of the way so that you can make the most money. Why? Because at the end of the day, you're paying for a membership, so they have to deliver. So they're going to take as much care of you as possible because they want to keep us happy as traders, correct? So again, there's no need for you to panic or worry. They're always going to make decisions in our best interest because as we trade with our real money, the expert traders are also trading with their real money, okay? So whatever our accounts are doing, their accounts are also doing. So they're going to make the best decisions for all of us to win. So this is another trade update. So you'll see it'll tell you it's plus, it's up 50 pips so far. You know, this is going to be the next target. Next target meaning this is the next price point that they expect the market to move to. You know, it might tell you break even. You know, it's going to give you a ton of different kinds of updates. So again, you want to make sure you always scroll down all the way down to the notes. If you don't see any stop loss, take profit, or entry point, because it's probably a trade update and it's telling you how you should update your current trades. All right, so that's one tool. The next tool is the Harmonic Scanner. The Harmonic Scanner is similar to Swipe Trades, except instead of them sending you the trades, you go on the platform and search for your own trades to put in. So pay very close attention to this. It's buy stop, buy limit, sell limit, sell stop. So these are the kinds of different what's called pending orders that you can put into your MetaTrader app. So buy stop is basically when it's saying buy if the price hits this particular price point and keeps rising, okay? Which basically means pick up this price point and only buy it if it continues to rise, okay? So you're going through a price point and continuing upwards. Buy limit is when a price is higher up and you're waiting for it to drop down to a specific price point, bounce off that price point and continue going up, which is why you see the arrow drop down and then shoot back up. You don't want it to keep going straight down towards a sell. You're waiting for it to hit a specific zone, bounce off that zone, and then start going back up again. So that's what a buy limit is. Again, you don't need to know all the ins and outs and all of these right like the back of your hand because the apps and the software will tell you this, but it's still just good to kind of know. A sell stop is the same thing. A sell stop basically says the price point is up here. I want it to drop down through this particular price point and continue going down, okay? So you want to wait until your price point, which is high, to drop low through that specific zone and continue going down, and then you will get into the trade. That's basically what you're telling the MetaTrader 4 app to do for you. In a sell limit, it's the opposite. In the sell limit, the price is already low. You're waiting for it to rise to a certain level, bounce off that level, and then start coming back down, okay? And I'm going to show you exactly what that looks like on the next page. So take a look at the sell limit. You see the price is low. You want it to go high up, and then you want it to execute the trade once it starts coming back down. So here, this is what the Harmonic Scanner looks like. Girl, don't ask me about no harmonic scanners. CJ, I don't know what exactly this does. All I know is that it tells me where to put in my trade and how to make money online. What the harmonics do, what this here triangle looks like, what is a deep bat, I do not know, okay? All I know is that when I come into the harmonic scanner, I'm looking for trades to put into my phone, okay? So here you'll see, if you look very closely, you'll see a blue line going all the way across the screen, right? And it's going through this little orange arrow. This is where the price currently is. So the blue line is where the price currently is. And I'm not talking about the dotted lines. It's like more of a straight line up here towards where the letter D is, okay? Let me see if I can annotate this. Oh, I can't, it's lit. Okay, so this line right here, looking real ugly. So this line right here, this is where the price currently is, right? So basically what you want to do is you want to wait, because of where the price point is, you want to wait until the price rises up, which is this orange arrow up to the green line, which is the entry point. You want it to rise up there. Once it hits that entry point and it starts coming back down, you're going to sell it, right? You're going to sell it so that you can take this take profit 1, 2, or 3. Again, depending on how long you're willing to wait, how much you're willing to risk, all that good stuff, you can decide which take profit point you want to take. But this is why it's so important to understand the sell limits and the buy limits and all that stuff, because you want to make sure that you're putting in the right kind of trade. So if the trade is lower, right, if the current market price is lower than what the entry point is, then you already know you're probably going to be going for a limit, a sell limit, right? Because you want it to go up, bounce off, and keep coming back down, right? When the entry price is higher, right, it's up higher than the take profit points, that means you're in for a sell because the price is high and you're expecting it to go lower, right? If the letter D was down here where the take profit 3 is, wait, let me get my, now I got hype because I got some whatchamacallit, some annotation tools up in here. All right, betting sing. All right, so let's say that the price point, the entry point was down here and it was going up this way, then that will be a buy because the entry point is lower and you're expecting it to go higher into a buy. Yes? Yes. So more importantly than all of that I just said, when you go into the Harmonic Scanner tool, again, you're going to log in with the same login information as you logged into Swipe Trades. You're going to go in and you're going to, here on the side, you're going to see a bunch of different traders. The best and most accurate traders, in my opinion, are the last two. The little triangle, which is Trader's Way, which is the broker that we use, and then the P, which is Pepperstone, which is another pretty good one. So I go into both of those and I will search through to find different trades. So you're going to click in there and you'll see all the different pairs and a whole bunch of different trade signals. But what you want to pay attention to is the stop loss, the entry price, and the take profit. Same way that we entered it for the swipe trades, you're going to look at the screen, you're going to open up your MetaTrader 4 app, you're going to find the pair, right? You're going to find this pair over here, USD CAD, right? You're going to enter, click market execution and select sell limit because we want the price point to go up and bounce off that line back down, right? You're going to pick an entry price. So you can pick 1.2881 or 1.29043. This trade might actually still be active because I just pulled it maybe like 30 minutes ago. That's a lie because I've been on here for 30 minutes. Probably like at 7:45 and it's 8:45 right now. So it might still be active. So you guys can definitely try to put it in. But yeah, so you'll take the entry price, then you'll take the stop price, the stop loss price, and put that in, which is basically how much you're willing to risk, right? So this is the amount that you're willing to risk, this amount of pips. And I'm not going to get into calculating pips right now, but what you need to know is that basically this is the amount that you're risking, because if this trade continues to go up, you're going to get stopped out and you're going to lose this much money because the trade didn't execute as planned, okay? Now, assuming that all goes well, it won't hit the stop loss. Sometimes it does, most times it doesn't, but you're going to put in the entry You're going to put in the take profit. And then again, you're going to let it do what it do. You don't need to go in there and edit anything. You don't need to go in there and modify anything. I usually put these in at nighttime so that I can go to sleep and not be a psycho checking my MetaTrader 4 app. But if you put it in, like, you know, if you wake up and you put them in before you go to work or whatever it is, again, similar to swipe trades, you set it and forget it. You do not need to be a trading genius. You do not need to know how to read the charts or the trends or anything like that to be able to make money. Again, the platform and the tools do that all for you. You just need to pay attention to where's the red, that's my stop loss. Where's the green, those are my entry points. And where are the blue lines, those are my take profits. That's it, okay? Okay, now the annotations want to just be here forever. All right, boom. So then another important tool that we have is called iMarkets Live TV. And this is basically experts who trade live on a webinar. And you can basically ask them questions and learn about their specific strategy, why they trade the way that they do. So Adeze Duncan, she teaches Forex 101. So if you're like, look, I don't really want to take that online course. I need to be able to ask questions. I kind of want to do it, you know, I need a little bit more hand holding. I want to do it with somebody. Adeze teaches Forex 101 Monday, Tuesdays, and Wednesdays at these times right here, listed towards the bottom. So you can jump on there. She'll walk you through a lot of what I walked you through, obviously much better and way more in depth. But you can ask her questions. You can ask her to repeat something. You know, you can let her know, hey, I really don't understand how you get a bullish candlestick. Can you explain that to me? Or, hey, I really don't understand, you know, about the take profit. Can you, you know, reiterate that? So this is really, really great. Again, if you're not more of a self-taught kind of person and you kind of need an instructor, she's great. And she's actually the one who created those videos in the academy. So you're going to learn from the same person. It's just whether you want to learn it live or through recorded videos. Forex chicks I love. One of them, she's actually like 5 months pregnant. She's so cute. And the other one, she's Puerto Rican and hilarious. But the Forex chicks, they're on Sundays and Thursdays at 10 p.m. And I love them because they talk about the news and what they expect is going to happen, right? So they'll go over different trading pairs. You can say, hey, you know, I'm looking at the Euro USD. Like, what do you think? And they might say, you know, don't get in the trade right now. It's a really bad time. Or, yeah, you know what? Definitely look for it to get to this price point and then enter a trade. They're really, really great at helping you make better trading decisions, right? And they trade a specific kind of Forex strategy called Fibonacci, which again, you guys will learn all about it in the academy. But I really, really love their sessions because they take the time to explain things and break things down for people to help them, you know, become better traders. Stevenson Lindor, he is the man. He has like $100,000 account. Is nuts. Like, this man is a savage trader. Okay, he is more of a positional trader. He likes to do like long-term positions. So a lot of the trade setups that he gives out, you'll be in them for, you know, a week or 2 weeks or even months. You know, there's some trade setup that he's given us that he's like, yeah, you're going to ride this the rest of, you know, 2017 into 2018. So he's more of I want to stay in a trade long and get that long money. Okay, that long money. He's not really a scalper, which is someone who gets in and out of a bunch of trades. So he rather make, you know, $10,000 on one trade than $1,000 on 10 trades. All right. He's great because he has the weekly outlook on Sundays and Tuesdays. And he basically tells us, this is what's coming up in the market. These are trade setups that you need to look out for. And he basically gives us like a cheat sheet on what the currency pairs are going to do in the upcoming week. Kevin and Kyle are my favorite. Kyle is a New Yorker, so he talks a lot like me. He'll be like, you know what, we need to bag it up. He plays Cardi B. He plays, what's his name? 21 Savage. When he trades, he's super fun. He trades at 9 a.m. and at 7 p.m. And he actually is a scalper, which means he gets in and out of a bunch of trades throughout the day. So while you're on a session with him, he'll tell you, hey, sell USD against the Mexican peso right now, like get in this trade right now. So he'll tell you, buy this, set this as a stop loss, set this as a take profit while you're on the session with him. So he's really great for somebody who's newer and just wants to get a couple of new trade setups throughout the day. These sessions, again, most of them happen multiple times throughout the week, so you can get on the ones that you like most. For me personally, I try to get on as many of Kevin and Kyle's sessions as possible, and I try never to miss the Stevenson session. But again, life happens, things happen. There are recordings, so if you miss something live, you can definitely go back and watch it. But again, you want to be on there live as much as possible because you want to get these live trades, right? And that, again, is on iMarkets Live TV. Same login as everything else. All right, so we'll get into the last piece, which won't take too long, and will kind of, again, help you make decisions as you start your trading journey. So there are two kinds of traders. So as I alluded, kind of, Stevenson is a long-term positional trader, and then Kevin and Kyle are scalpers, which they do short-term, quick, same-day, intraday kinds of trades, right? So there are people who, like Stevenson, who trade the trend. So this is actually the chart for gold. Gold USD is a difficult pair to trade, but it's my favorite pair to trade, of course, because I want to be controversial. But so basically, if I were Stevenson, right, I would be a long-term trader. So I'm trying to trade the trend. That means I got into the trade all the way over here on the left when it was down at this price point. Let me get down over here. Right. And I rode this as it dropped, as it went up, as it dropped, as it went up. And I just stayed in this trade all this time. This might be 2 months, right? And I stayed in this trade. But look, if I started down here and I waited it out till it got all the way up here, that's a good amount of pips. It might be like 500 pips. So you could easily make a good chunk of money if you're patient and if you want to trade the trend. That's not my life because I don't have any patience. So if you're like, girl, I don't have time for this trading the trend, I'm trying to get in and out and make money every single day, then you're going to do what I call is chasing the candlestick, which is you're probably going to stop and you're probably going to do more intraday trades. That's what the swipe trades does a lot, and that's what the Harmonic Scanner does a lot. They give you trades that you're not going to hold forever. They're usually like a day or two and you get out of them. So here, these are 4-hour candles. So here in this little yellow highlighted section, you probably trade this for about a day, right? You probably might have put the trade in at 8 o'clock in the morning, and maybe you got out of it like in the evening time. But you chased the candlestick where you saw it was dropping. It dropped from the price point up here, and it dropped all this red all the way back down, and you got out of it down here. Right? Then you might have waited for it to trigger again, and you might have gotten into this trade again and rode it all the way up here and then gotten out. And then maybe you continued, you waited, and then you got in down here and then bought it and then got out of it up here, right? So this is happening every day, all the time, right? The market continues to move. So when you're more of a scalper, when you're more of an intraday trader, you're trying to get in these short-term trades that you're going to get in and out of, okay? Again, it depends on the type of person that you are. If you're more of I like to be a hands-off trader, I don't really have time to be, on the Harmonic Scanner, I just kind of want to set it and forget it forever and ever, then you might want to get on Stevenson Lindor's session and you might want to get into some of these longer term trades. If you have a little bit more time, or if you don't mind getting in and out of the market a lot, putting in a lot of trades, then you might be more of an intraday trader, more of a scalper. And, Kevin and Kyle might be for you. So again, it's important for you to try these different tactics with your demo account so that you can see how it works for you. Because a lot of us think that we're patient until we're not, right? We think that we're patient until we're $50 in the hole, but we don't want to wait until it becomes a $500 profit. Right? That's me. I see that I'm $5 in the hole and I'm like, oh my God, I'm going to be poor. Why did I even do this? I'm like having a heart attack. So I know that long-term trades aren't for me because I just personally don't have the mental strength and capacity to hold it out. But there are some people that do. So it's important for you to actually put in real life trades so that you can see how you react, because a lot of people trade very emotionally, and trading should be a very strategic, non-emotional activity, right? Like the market moves, it ebbs and flows. You're going to win some, you're going to lose some, and that's just a part of life. So you kind of need to learn how to control and balance your emotions to become a better trader. There are also different trading strategies. So as you put more money in your account, like I said, you're going to be putting up those lot sizes. So I'll give you a perfect example. This is actually a trade that we got today at 6:54 p.m. Well, I lied. I think this came in earlier, but I saw it at 6:54. But nonetheless, at 7 o'clock, I put this in. So it was, I think it was a buy stop, if I'm not mistaken. Here are the take profits, the stop loss. And what you need to pay attention to are the notes, because the notes are going to tell you how many pips your take profit is set to give you, right? So if it hits take profit 1, it'll be 30 pips. And if it hits take profit 2, it'll be 60 pips, right? Let's say that your personal goal is that you want to make $30 a day. You might not have to put in a bunch of trades, right? If you want to make $30 a day, you can say, okay, I'm going to trade take profit 1, but I'm going to make my lot size 0.1, which means for every pip, you're making $1, right? So if it's 30 pips, you're making $1 each. That's boom, $30, right? You hit your daily trading goal. You can go about your life. But let's say, again, you have a smaller account. You don't have a $1,000 account. You don't have a $2,000 account. So you have to trade lower. So let's say that you trade at a 0.05 lot size. You would decide to go for take profit 2, right? Because take profit 2 is what? 60 pips, right? At 50 cents per pip, 60 pips, my bad, I forgot to change this right here. It would be $30, right? 50 cents per pip, 60 pips, $30, right? So there are some people who trade with very, very high lot sizes, but they don't expect to get a lot of pips, right? They might trade with a 0.1 lot size and only go 10 pips to make $10 versus someone who trades, with a 0.05 lot size, they're going to need 20 pips to make $10, right? So it really, really depends on, again, the kind of trader that you are, how much money you have in your account, how fast you want to make money, how patient you are. It's a bunch of things. Like for me, I'm more of a lower lot size, more pips type of person. My boyfriend Kevin be out here on some YOLO. I'll trade at 0.5 and take 1 pip and make my $5 and go about my day, right? So it really depends, again, on the kind of trader that you are and the amount of time that you have to really study the market, learn how to trade, and make the best decisions for your account. All right. Come on, son. All right, boom. So once you also signed up, when you got the email and you got that getting started packet and all that good stuff, you also got at the very, very bottom the link to this spreadsheet. And this spreadsheet is what's going to show you compounded daily growth, right? So if you're growing your account, as you can see here in the red, if you grow a $100 account 10% every day, down in this daily growth column C, is how much money you need to make per day to hit that 10% goal. For me, I started with a $300 account with a 5% goal, right? You can change this. You can say, I want to grow my account by 20% every day. I want to grow my account by 3% every day. You can change it. And as you change it in the spreadsheet, all of the numbers will update. So it's really up to you to decide. Like I said, you guys are adults. So I'm really looking to you to decide what you want it to be. But these are the numbers that you need to focus on based on your day. So on day 1, if you started with $100, your goal is to make $10 to get that 10% growth, right? So after that trading day, you should have $110 in your account. The next day, you start with $110 and the goal is to make $11. So now you have $121. After 60 days, if you scroll all the way down on that spreadsheet, after 60 days, you will have made $30,000 if you grew your account by 10% every single day, right? That's the power of compounded interest and daily growth, right? But we need to be very diligent in putting in trades, right? Because there are going to be some days where you lose $20 and now you need to make $30 to cover that $20 deficit and hit your $10 goal. Like, this trading life is not easy, but again, the products make them as easy as possible for us. It's our job to learn to be the best traders, right? Because if you have all of the tools, but you don't know what to do with them and you don't know how to make the best decisions for you and your account, you're not going to be successful in trading, right? So it's important for you to understand, yes, we're going to give you the tools, but it's also your job to actually learn how to trade in real life. That's like you getting a car and not knowing how to drive without a driver's license. It's like, okay, girl, well, you're just going to be out here killing everybody, right? So again, look at trading as a vehicle for you to learn a new skill set while you make money, okay? So here, again, you want to set your goals. For me personally, I update this every couple of weeks because I trade more so. I treat my account more so like a savings account. Like I save for certain things. So like I saved to buy furniture. So I bought like a couch. I wanted a coffee table, all this other stuff. Not a couch cover, coffee table, all this other stuff. I want to get a new couch. I want to get all of these different things. So I use my account and I say, okay, within the next 15 days, I need my account to grow this much. So I'll update the daily growth based on how much money I want to make in a certain amount of days. Some people have long-term trading goals. So again, if you say you want to buy, I don't know, if you want to put a down payment on a condo in 90 days, then you would adjust it so that the balances reflect those goals, right? But every day you just want to look at column C, and you just want to see how much money do I need to make today on this day to hit my goal and continue to increase my account by 10%. And again, the spreadsheet is already coded and everything. So you literally only have to change the red boxes and the rest of the spreadsheet will update for you. And that is the end. So it was actually an hour, not 30 minutes, but y'all still here, so that's important. So what you guys need to know. So if you signed up, you have a one-on-one call with me. It was in that getting started email. And we're going to talk about what specifically is going to be your trading plan. What lot sizes do you need to use? What IMLTV educators do you need to watch? How many times do you need to get on the Harmonic Scanner? What should your daily goals be? We'll talk about all of that because we want to create a trading plan that revolves around your real life, right? It's unrealistic for me to tell you, hey girl, yeah, you want to trade the London session at 2 a.m. when you work a 9 to 5 and you have 3 kids, right? It's going to be unrealistic for me to tell you, hey girl, yeah, you need to get on Kevin and Kyle's session at 9 o'clock when you have a 9 to 5 and your boss does not play these games, right? So we're going to come up with a plan that's best for you and your life. So before we get on that call, I want you to think about what kind of trader do you want to be? Do you want to be a scalper? Do you want to be more of a positional long-term trader? Do you want to take big lot sizes or smaller lot sizes? Are you trying to go for big pips or a little bit of pips? Are you interested in putting in a lot of trades, or do you want to be one and done, put one trade in a day? What kind of trader do you want to be? Even though you might not know, but hopefully you'll be using the demo account to kind of get a feel for that and figure that out. Then what is your goal trading? So again, some people are like, hey, I want to trade because I want to quit my job. I need this to be a source of income. Some people trade, as an alternative to a 401k, right? They put their 401k money in the market and they get better returns. Some people like me use it as a savings account, where it's kind of like, I'm just going to trade until I hit this amount of money, and then I'm going to take my money out and spend it. You want to decide why you're trading. What is your point of trading? What is going to keep you motivated? Because if you don't have a goal, when trading gets hard, or when you feel like you just can't grasp a concept, or you just can't catch some pips, you're going to want to give up. Like, I'm going to tell you right now, there was times where I blew a $300 account because I thought I was an expert and I was ready to quit. I took like a 3-week break, and then I was feeling poor again and I jumped back in the market. So it's important for you to really remember why you trade so that you can make it through those difficult times. Then what are you going to actually commit to reaching your goal, right? Don't tell me that you want to make $2 million a day, but you can't get on no IMLTV calls and you think swipe trades is going to take you to the king, because not. Okay? So what can you commit to reaching your goal? Is that, putting your kids to bed earlier so that you can get on some sessions? Is that, taking your lunch hour later at 3 o'clock so you can jump on a session with a Daisy Duncan? Is that waking up earlier so you can get on the 8 o'clock session with Lex Waves? Is that, I don't know, getting home from work and making dinner, but then jumping on the Harmonic Scanner to put in trades? Like, you have to figure out what it is that you're willing to do to make this money, right? Because the money is not going to make itself. It requires effort. How much time, again, do you actually have to trade? So, you know, hey, Emily, I plan on trading during my lunch hour, before work. I'd rather trade late at night before bed. I like to stay up in the middle of the night. I'm a night owl, so I want to trade the London session. You know, you tell me how much time you have to trade, and we can come up with a plan that fits that time frame. And then how much money will you put in your account? Listen, sis, bro, you do not need to impress me. So don't come lying on the call talking about, I'm going to put $2,000 and you got 20 bucks, right? Tell me for real, what is it that you're planning on putting into your live account? How much money is it that you're going to be trading with? Again, so we can come up with a plan. Because if you lie and try to impress me and tell me you're going to put $1,000 and you really only put in 100, the plan is going to be all skewed. So don't be embarrassed if you only have $50 or $100 or 20 bucks, whatever it is that you're going to put into that account. Let me know. That way, again, we can come up with the best plan for you. All right. I'm going to open it up for questions now in case you guys have any. If you don't, thank you so much for jumping on the call. I hope it made sense. And you can definitely reach out to me in our Facebook accountability group chat, or of course, most of you have my number. So you can also text me as well. Good night, y'all.